Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we start with Asian shares. They were mostly lower on the first trading day of the week as metals sold off sharply. But of course, activity was light with markets in Japan and Indonesia closed for public holidays. After flirting between gains and losses at the start of the trade, China's benchmark Shanghai Composite Index was last seen trading at 0.5% lower as property heavyweights reacted on the latest set of housing data released over the weekend. However, we're looking at the land down under Australia's S&P 200 index. It ticked slightly higher to its highest close since June 25. While, of course, the Australian dollar recovered from its lowest level against the greenback since May 2009. The Australian dollar set a fresh 6-year low, pressured by a slide in gold prices as well as caution ahead of forthcoming events, including a speech by Reserve Bank of Australia's Governor Glenn Stevens. And of course, we're expecting the Australia's second quarter CPI inflation data, both due on Wednesday. The Aussie slid 0.5% to 0.7339. It fell to 0.7328 at one point, which is its lowest level since May 2009. In Europe, the equities opened higher on Monday as Greece reopened its banks and talk in Europe turns to the country's third bailout and measures to ease its debt burden. The pan-European Stoxx 600 index opened around 0.2% higher as the Greek banks are to open on Monday after being closed for around 3 weeks. Of course, withdrawal limits are now shifting to 420 euros a week from 60 euros a day. The dollar hits a 3-month high against a basket of major currencies on Monday after solid U.S. inflation and housing data supported all expectations for Federal Reserve to rise interest rates in the coming months. However, a fact that needs to be followed, and we're also looking at the greenback, that it's coming off its best weekly performance in about 2 months, having risen last week after Fed Chair Janet Yellen mentioned that U.S. interest rates will probably be lifted later this year. The euro held steady at 1.0824. Earlier, it hit a 2-month low at 1.0820, a drop below its May low of 1.0819 would take the euro to its lowest levels since late April. The euro has come under renewed pressure while the dollar has gained broadly as investors shifted their focus back to the diverging outlook for monetary policies and, of course, interest rates among major economies. Gold in the commodity sector, however, got whacked in the Asian trading session on Monday, plunging below 1,100 an ounce for the first time since March 2010. And of course, we are looking at the precious metal that it's only headed lower from here. The precious metals last leg down was reportedly triggered by speculative selling in Shanghai Gold Exchange, catching investors off guard. Gold slid over 4% to its lowest as of $1,086 an ounce in early trade on Monday before paring back some of those losses over the course of the day. It was down 2.3% at 11.07 in late Asia trade, with, of course, the Federal Reserve first rate hike looming and, of course, the prospect of a stronger greenback. The odds remained stacked against gold. And we think there is further downside on the price once the dust of course settles and the focus shifts back into the US dollar strength and the interest rate outlook. Oil prices in the energy sector edged slightly lower on Monday as data showed Saudi Arabia exports fell to the lowest in 5 months despite record output, while of course a resurgence in U.S. drilling activity seen earlier this month seemed to fizzle out. However, both international and U.S. crude futures posted their third consecutive week losses last week on expectations of increased exports from Iran. following a deal to ease sanctions against the OPEC producers. Also, we're looking at the U.S. Crude futures was down 17 cents at $50.72 a barrel on Monday, after, of course, falling more than 3% last week and more than 14% in July. Now, major events today with some of the Asian markets closed. That's all for today. Thank you very much for watching us. See you next time. Bye-bye.